Okay, this is the Order Flow Trading Course, Lesson 19. Test yourself and practice charts. My name is Michael Valtos. I'm the founder of orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. CFTC Rules 4.41 state hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed without the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. So in Lesson 19, I'm going to give you a chance to test yourself and show you a bunch of practice charts. I hate to say it, it sounds cliche, but practice makes perfect. At least gives you a better understanding of what's happening. I can't stress enough, everyone needs practice. Football players practice, golf players practice, doctors practice. Even though a person is already successful and makes a lot of money in their chosen profession, they are constantly trying to improve. Tiger Woods, would always go hit, 300-400 golf balls, after a round. You always want to try to improve what you're doing. It's just something, don't think you get to a level and you know it all. You'll find that you get to a level and you want to know more. And, I said, if you get to a level and you think you know everything, chances are you don't know enough. So, what I've prepared for you in this segment, this might be a long segment, but we'll see. I know this one's got a boatload of charts. And what I have coming up here is 3 days of E-minis on a 10-range chart, 3 days of the ZB, the 30-year bond futures on CBOT of 4-range charts, and 1 day of E-minis on a 15-minute chart. However, the 15-minute chart, it's hard to fit all on one screen. So, what you'll see is, you'll see edges of the bars. But, what's important is, how to read what's happening as price comes down to a low or price comes up to a high and how to react. I said, probably to get the best value out of this, you may want to print this section up. I know there's a lot of slides and a lot of charts. And some charts, say, carry more value than others, but I'm going to go through it and just sort of talk about what's happening in each chart. And I said some charts may not have much to go off of, and other charts may have more. It's a PDF that you can download with the charts. So if you find something you want to use as an example, feel free to print it out. If you want to print out the whole entire section, it's a long section. But, it's up to you. If you work at a place where you got free access to a printer, by all means, print everything up, every lesson. All the sections are available for you to download. So, with that said, let's get in. Okay, so this is the first chart, and this is the E-minis. It's a 10-range chart. This is February 9th, 2016, so it's fairly recent. And, what I want to talk about is, what I'm seeing here in the market. Okay. And so, the market is starting to rally here. This is 8:40. This is all my charts are in Chicago time. So, 8:45, we're rallying. And all of a sudden, we hit the high, we have a divergence, and we have a ratio. Okay. Which, to me is, sort of lining up, hey, look to get short. However, if it's just a ratio with a divergence by itself, I might consider it quite strong. But what's happening just before it? You have a couple of small prints. Here you have a single print of 4. Here you have a small print of 12. You have the ratios 45 and 53. So, right now I have this setup here, which I like. I'll be honest, it's a divergence with the ratio. The thing that sort of makes it a little bit weak in my mind is the fact that it's right behind 2 other ratios. I said if this market was just coming up on average numbers, I'd be more inclined to take it. If you put a gun to my head and said, are you going to take this trade or not? Yes, I probably would take the trade. But I'd want to see what's happening in the next bar. I want to see some confirmation that, that these levels, because I often talk about single prints and to a lesser extent small prints as also being support or resistance. So I know that, for us to sell off, we've got to get through these 2 levels first, between 48 and 47. So, I said if I'm looking to be short, and I'm looking at a couple of support levels right away, standing in front of me for the market to sell off, I'm a little bit hesitant. But like I said, if you were to put a gun to my head, I probably would be looking to take the trade, with the stop somewhere up here. Now, where would I ideally love to get short? I'd love to get short around this 1850 level. Okay, so how did it turn out? Right away, it sold off. In this bar closed, and we opened the next bar, and we sold off right down to the support level, the single print, and we just bounced right back up. So normally I'm looking at, my entry level around the point of control of an entry bar. That's my ideal level. An aggressive level would be getting short just, as soon as this next bar opens, or, maybe a little bit back in here on a pullback. That said, normally my stop would be just above the ratio. So in this case, it's the small print of 10 lots. So, had I got short, I would have been stopped out. But like I was saying before, looking at these 2 single prints, the single print and the small print, right before, I get the divergence and the ratio, really just sort of has me, I'll say not confused, but, not really interested in taking the trade. I'd rather see this bar here confirm it, going down. But like I said, if I'm just looking at it here, you put a gun to my head and said, take a trade, I'd be looking to get short. Whether get long, get short, or do nothing. Well, I want to say do nothing, but do nothing is a trade. As if you put a gun to my head to make a decision to get long or short, I'd probably be inclined to get short with a tight stop. Which, it didn't work out. We just made a new high by a few ticks. 1, 2, 3, 4, 5 ticks or something before then we started to sell off. So, I wish I could just show you charts all day long of trades working out. But take things into context with what's happening. I said, when I'm looking for a trade, to get long or get short, I want to have something, where I'm not going to be running into a support or resistance, right away. So, this is what sort of, threw a spanner in the works, which just made it a little bit more confusing. It said, if this was just a divergence with the ratio, and these are just average prints, black numbers instead of blue, yeah, 100% sure I'd be getting short. But when I see other things that sort of, say cloud my decision, but other things to take into context, we're going higher because, price is being rejected down here, and all of a sudden I'm looking to get short right into that area. I'd be a bit hesitant. And what happens? The market just sort of trades sideways, around this area. It doesn't really poke down into here for, almost at all. Okay, so, what happens? This is, okay, well, actually, this high here is a divergence. It doesn't show on here because the arrow is just a little bit above. Just remember the 855 time in the next chart, which is right here. Okay, so we get a divergence again. Again, no ratio. So, right now, I'm not necessarily convinced that this is going to be the high. I might look for it to sort of go sideways to a little bit lower and possibly take out that high again. I said I like to have a divergence and a ratio, because on a rising market, a day where the market just keeps rising, you're going to get a lot of divergences. And we go down a little bit and then rally right up through the high. Okay, then we hit another divergence there at 902. Okay, this is that bar at 902. Again, no ratio. I said be careful selling, selling every divergence on the way up, because the market may come off a bit, but it'll just keep going higher and higher. So, still, I'm not necessarily one to keep, try and buy into the high. Ideally, I'd prefer to sell into a low, but I'm not necessarily getting any reason to be getting short now. Earlier I had that divergence with the ratio, which I like, but in that case it didn't work out. But I did feel that there was a little bit of other circumstance just ahead of taking that trade. And so we come back up. We take out the high here at 909. Okay, remember that time. At 909 here is you get a buying divergence. Now, as the market's going up. Now I know we keep making new highs here, and for me, taking a buying divergence on a high is, I'll say, a risky proposition, because that's what you want to see at highs. You want to see buying imbalances. I said buying divergence, but what I meant is buying imbalances. So you're coming up here and you're seeing the buying imbalances right at the high, which is what you expect to see at the highs. And then just after it. Okay, so in this 909 bar, you see a buying imbalance, stacked buying imbalance. And, I often talk about earlier taking things into context. And here you have a buying imbalance literally right up at the high of the day. As we're making new highs, you have the stacked buying imbalance. I mean, you have to take it in two ways. Do you think the market's going to keep going up, 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 or is the market at some point going to turn? I'm more inclined to think at some point the market's going to turn. I mean, yeah, you have days where the market's a one-way street, but those days, are generally pretty rare, and you tend to get more range trading than just one way. The market going one way. So that's why I'm always hesitant to take stack buying imbalances near the highs, because it could be stops getting triggered, or it could be people just coming in and saying, hey, the market's been rallying, I need to participate and get in. And what do you have? Immediately after it, you have a divergence. And the market starts to sell off. Now, there's nothing in that divergence besides the divergence to tell me to get short. I do like that the next bar is also negative. But, what you're looking at, had there been a ratio here, had there been a blue number telling me a single print or a small print up here at the high with this divergence, I'd be more inclined to get short. For the one earlier I was showing you this morning, earlier in that morning, it had ratios here on the way up. So, there's no ratios here as far as blue numbers. And, I tend to find the market can move lower a little bit easier. So, I wish there was something up here to say, hey, there's a sign for me to get short, but there really wasn't, other than just the divergence. If you think order flows is going to pick every high and every low, you're mistaken. There's no system out there that's going to pick every high and every low. I like to try and read what I can into the markets. But sometimes the markets, are doing what they're supposed to do and facilitating trade. So in the next chart, this is the bar where the divergence was, and we sold off, and we're starting to see some ratios on the way down. Here's a single print, here's a ratio bounce low. It's a little bit far off the high for me to already want to, get short, but I'm more inclined now to see the market, work its way down than just still making those highs. So what I'm going to be looking for now is, maybe another sign to get short. I said it's a little bit off our highs already, but for me to take these, as short signals, I said, our high is around 56, and we're trading 48 already, so it's hard for me to get excited. I want something else to, really tell me that the sellers are coming in. We're starting to go down, but then, we go lower, the market ticks up a little bit. I want to see something that's telling me the market's going to really come off. And here it is. Okay. Okay, going back here, this is 927. Where are we here? This is, hey, I think I'm missing a page. Okay, and here it is. We're starting to come off some more. And what do you see? You see this nice juicy selling imbalance in there, which is indicating it's coming in a bar where you have a single print as well. So it's indicating that prices up here are getting rejected. And look for an area to get short. Earlier we had the single print here. Market rallied right back up to it and came off. Now we have a single print with a selling imbalance. It's not, and you have the point of control up here near the high. It's safe to say that, if we're going to pull back, look for a pullback at least to this point of control and to a lesser extent to the single print. So, I usually like to get short in the imbalance, that, the zone of the imbalance. So, at 1841.5 is a good area to get short. And I do know that, oftentimes you do get a pullback up to, up to the single print. Now, normally, I'll say normally, but, usually you don't get the selling imbalance and the small print in the same bar. But, it's something that, you can put the two of them together. So if you're looking for a pullback, look for it to come up somewhere up to the point of control and the single print. But normally, I'm happy to get short in here at, in the middle of the zone, 41, 41.25, 41.5. Anywhere in here is a good area. And your stop is just, behind this single print. So, it's giving you about, what was that, about 5 or 6 ticks of stop. And, at the same time, where's your profit target? Your profit target is, maybe 4 or 5 points away. So, if you're short here at 41, you're looking at, possibly 36 as a take profit level. And what happens? You start selling off, and then you see another selling imbalance right there. So, it's confirming the move. So, if you were, trying to get just five points out of it, you have a bid in there at 36, you might want to back off a point or two. Two, sometimes when I try to back off by 2 points, it just turns on me. Usually I find that, maybe backing off by a point is better. And, we come down to 34, and then we turn around, and what happens is, we hit the swing low, and you're starting to see some buying come in. And there's no ratio here, but you're seeing some strong deltas, and all of a sudden, bam, you see a nice buying imbalance. And, it's going opposite of what you just saw here. It's almost, opposite the same level, but it's a little bit further off. And, we pull back into the zone, so I'm using this zone as my new support level. And what happens? We come back in that zone at 38, so it gives you a chance to get long. Whereas here, it gave you the chance to get short in the zone. Now it's giving you a chance to get long. As far as getting short on the second imbalance, I'd much rather get short on the first selling imbalance. Once you get to the second one, the move's already happened that I was looking for. I'd be looking to trade this one, a bit differently. So, had you gotten, say I missed this first imbalance, and I'm looking at the second one, would I get short? Yeah, I'd get short, but I'd be getting stopped out right away. That's why you got to have, stops in place. If you're, you're not trading with stops. If you just, shorten up here and thinking the market's going to come off, there's going to be times where it just goes against you. This one spent 2 bars, 2 bars lower, basically about 30, so-called 37.5. It got down to 34.5, so that's 3 full points away. And if you're looking for it to come back up, after selling off 3 points, rally 3 points and then sell off another 5 points, sometimes that's a bit of a stretch of the imagination, so to speak. But, had you gotten short in here, yeah, you'd have, you should have a stop in there, just above the high. and you'd be stopped out. Fair and simple. But it's giving you another reason to take another trade here, another reason to get long around this 38 level. And what happens? The market puts in a nice move higher from 38 all the way up to 46. 38, for me 5 points. 42 is up in here, which is it's a nice move. I mean, I don't know if there's anything in here. I don't see anything in there to really tell me, continue my move. That the move is going to continue, an additional 5 points. But, 43 would be 5 points, getting long at 38. So, you're getting to 5 full points, and what's your stop is, a point and a half. And then, we come up to a new high again. It's one of those things where, this bar here at 1012 is right here. So you don't see the buying imbalance up here, but you had a move, from 38 all the way up to 48. It's a 10-point move. Do you still want to be taking a buying imbalance up there? No, not me. I'd rather be looking for a reason to, get short rather than get long after a nice 10-point move. Because oftentimes you're going to see the market make a nice move, pause, go sideways, then either continue or just sell off. And so in this case, it sort of went sideways a little bit lower. And you have this selling imbalance here with the ratio. Okay, I'm interested in it. And, I'd be looking to get short somewhere inside here, 43 3/4, 44, 43 and a half. But then again, my stop is just going to be right on the other side here, 45. So it's a 1.5 stop. And what happens? It starts out in my favor. The bar trades lower, and we come back inside. We get in on the pullback, and it just keeps pulling back until it stops you out. And then, I said if you're not trading with a stop, one of the reasons why you should have a stop is because once the sentiment changes, so the market was rallying, right? We made a 10-point rally. All of a sudden you see a shift in supply and demand. You see the negative delta is fairly strong, 1200, 500, 1200, but down here it stops. Positive delta, 1300, 850, on 2000. If you're short and the delta is, you got 3 bars with, a delta in opposite of your position, you should be definitely looking to get out. And after 2 bars, you should be questioning the trade. But then when a bar like this with a big, strong positive delta and you're short, you can't stand in the face of it. It'll just run you over. And then you have a single print here, a single print there. And what happens? The market just, it goes up and up until you get to this level. Again, you get another buying imbalance. It says it's just off the high, but, I said I'd rather be looking to get short near a high than get long. I have this buying imbalance. It's right behind this single print, which, is a level that I'm going to look at for, as resistance. So I'm getting a support level and a resistance level very kind of close to each other. If anything, I find these things kind of mixed. But I'm usually not a fan of taking a buying imbalance. After the market just keeps rallying and we get up near, swing highs or highs of days. And then the market, we come off that little, that little high that we had started put in here, working our way back down. Bounce around a little bit. We get a single print, a large print, ratio bounds low. It's kind of going sideways. I see a small delta here, so I'm not necessarily convinced of anything. Honestly, I don't really see anything much in this time period, this chart. Even some more. It's got negative deltas, but I don't know. I'm just not necessarily sold on any move here. Right now it's just there's a couple. They had a ratio here, which sort of cancel each other out, and we're just sort of in this little bit of a range, and it's just working lower. There is this selling imbalance down here, but where is it occurring relative to the market? It's occurring where in this area where you have two bars, have already formed. It's not like you're making a selling imbalance on a break as the market's moving lower, or at a high, where it's just sort of popped up there and the selling comes in. It's sort of sideways to a bit lower, and it's sort of in this area of, I'll say, congestion, but it's an area that we've been trading in for the last almost 10 minutes. So I'm a bit wary of that. And I mean, it does start out and it goes lower and it comes right back in there into the zone and trades on the other side, trades back down into it. Then you get a buying imbalance here. Yeah, I mean, it's one of those where it's just going sideways on you. When you're in trade, say I did take this as a short. What's happening is the market has just gone, well, it went through. I mean, later it came up here on the third bar and got through this high. But, usually if it's just going to start, even if you didn't take out the high, say this bar was a little bit lower, by the time you're in the fourth bar, fifth bar, this zone will draw out 5 spots on the order flows chart. If, by the fifth bar, definitely by the fourth bar, if you're not making any money on the trade, you definitely should be looking to get out. Now then you have this buying imbalance, and it's one of those things where again, the market is going, I feel the market is going sideways. That's what sort of kept me off of this selling imbalance. And then you have this buying imbalance still as the market's going sideways. Did it work out? Yeah, marginally at best. But it's one of those where if you're trying to get in on the pullback, you're getting in on the pullback in the third and fourth bar. But when you're getting in on the pullback on the third bar, you have a ratio, which is not necessarily something you like to see, because you're looking to get long, you're looking to buy in here at 1841, but you're staring at this single print right here, which is a bearish sign. You're looking at this buying imbalance up here on this red bar, which is also a bearish sign. So if you have a bid in here at 1841, you're filled in this bar, but you're staring at a couple of fairly bearish signals. So you have your bid in there, you're filled. What happens? The market goes up, okay, in the next bar, and you're thinking, happy days, happy days. But what happens in the next bar? You're staring at this single print as the market pulls right back into it. So if you're, I said, I draw these zones. I don't draw, the software draws these zones out 5 levels. The reason it's 5 levels is 5 levels is a level that I've chosen as one where I expect the trade to work out by. If by the fifth bar rather, the trade is just at break even, you get out. I mean, there's no reason to think this level is going to hold all day. The market does go lower. So had you been in long here with your stop down here, if you don't recognize what's happening already with these 3 bearish signs, especially after the 2 bearish signs. But this one you can sort of see developing as you're coming back into the zone, which is giving you enough reason to get out at around break even. You traded to your stop, but I think the market gave you more of an opportunity to get out at break even. Maybe you're interested to give it a bit of a chance in this bar here where it turned positive since you're long at 41. But then when it gets up to this single print here, which basically matches by there's a difference of 1 tick, the previous single print, and starts to sell off, yeah, I'd be definitely looking to get out around break even. The market does sell off a little bit further to your stop level, and then it just bounces back up, and you got a buying imbalance literally almost at the same level. It's just one price level shifted down. What are you going to do? You're going to take it or not? I mean, I don't know. For me, it's sort of in the middle of a zone, or I'll say zone in the middle of congestion, where the market is just trading sideways, more or less. So again, it does come in, comes back into your area there, trades around it, goes down. I said, I'd rather take, buying imbalances near lows, selling imbalances near highs, and not necessarily in the middle of an area where price is, just rotating back and forth. Okay, so, we're starting to break a little bit lower here. This was the previous bar. This, 1139 here, this bar, and this bar here are these two bars here. So, you have a single print. It's still in that area of price congestion, and the market's starting to trade lower. I mean, there's no, right now I'm not necessarily seeing a lot in the order flow there. It's just kind of average numbers, which you tend to see when the market is trading back and forth. Yeah, we're selling off here, but honestly, there's nothing in there that's telling me, hey, what's causing this move in the market with the order flow. I mean, yeah, I can see the deltas are, fairly negative. 700, 400, 200. Then here you get 2,000. That's a sign to me that sellers have picked up. But then, 700 and 2,000. So, these three bars here, it's telling me that the selling has really picked up. But, it stops down here. Again, there's no ratios. I like to get short when I see ratios, or get long when I see ratios. Because it's telling me that selling, that prices up here are going to be, rejected by sellers. But, I don't necessarily see that. So when I don't see that, oftentimes I'll, if the market's going to turn, it would just turn right back up into that area. So, we came down, and we hit this positive delta in this bar, and we're starting to pull up. We rally from, the 30 level up to 37, where you have this buying imbalance. Now, again, even though it's sort of after a move down and we pop up a bit, think about where it's happening. It's happened, at 37, our low is, 29.30. So, it's after a nice move up already. I'd much rather see it in here, somewhere down here, and get that, be able to get this move. Once it happens after a nice, 5 or 10 point move, or, any amount within that area, I don't think it's as effective. Okay, so we come up to the high, and what I find very interesting is we hit this high here, and you got a very small delta. You got a delta of 12, which is a fairly light number. And then you see a single print of 9 in a ratio, blue number. It's one of those that I'm looking to get short at. Reality is I'll be looking to get short in the next bar. It's hard to get short in that bar because you don't know if the market's going to retrace or not. And so we could be looking at a red, at a single print in a ratio, bars down here, thinking, hey, I get in now, I'm going to be able to catch the whole move, and then it just rallies right back up against you, and the whole reason, is out. So, I'd be looking, ideally, I'd be looking for a pullback up to this level, but I'd be looking for it in the next bar, or two. So I'll be looking to get short around 35. I mean, that's the ideal entry. If you're aggressive, probably 33.5, or around this area where the next bar opens up. And where would my stop be? My stop would be behind this single print. That's why I prefer to get short on a pullback rather than getting aggressive, because it's going to save me, some ticks. So what happens? Well, it doesn't pull back, and it goes lower. Okay, but then again, it stops down here. Now, I said I want my pullback to happen fairly soon, not 3 bars later. So even if had gotten short in here on the pullback and I waited till the 3rd bar to get short on, I'm already in panic mode, but I'm already in the mode where I'm thinking, do I really want to be short? Because what I'm seeing a single print, and I'm seeing, although these aren't stacked imbalances, it's 5 imbalances on a 10 range bar. So it's about half the bar is buying imbalances. So if I'm short and everything is going against me, there's a high chance I'm going to get stopped out. But, if I see this developing, most likely I would just get out rather than waiting for it to go to my stop. So what happens is the market rallies back up, and we hit a high here, get a buying imbalance at the high. This is something I like to get short on. For me, it's more of a short-term short, as opposed to thinking, I'm going to hold it for 20 minutes, 30 minutes. And so I'm looking to get short, as I'm anticipating this bar to close and this bar to open. So, I'm looking to get short somewhere around this 36, 35.5 level. And, it does provide the small move. I said, to me, it's a short-term indication that price is being rejected up here as opposed to a more of a longer-term one. And, so to get 2 points out of it, usually I'm very happy with. And it does give me an opportunity, from, what do you want to call it, 5.5 down to 3.5. And it does, so it gives, this trade here happened, the opportunity is there, it occurred. Whether or not you want to take advantage of it or not is up to you. And, in this case, it only put in a small move of, about 3 points. Bounced and started going higher again. I see these side-by-side point of controls, 3 levels. It's one of those things where, what do I think the market's going to do? Are we going to start spending time above these point of controls or below it? If we're starting to spend time above, this area here, instead of think of it as resistance, I'll look at it as support. So, I want to see what the next bar is. If we start opening up further away from this area, I'm more inclined to think the market's going to move up. And, it does, and we formed this new point of control way away from this area down here in the market. So started around. I don't know if I would have traded it. It's just one of those that it's, if I'm looking for a level, this is going to be my support level. Now, I often talk about, I like to take selling imbalances near highs, buying imbalances near lows. So, let's just rewind a bit. This was the low here, 1833. Okay, market rallies up. Boom, rallies all the way up to 45, 46, 47. So that's a nice move, right? From 33 up to 47. That's, what was that? 14-point move. And then you get a selling imbalance. What's just happened? So you had a nice move up, you get the selling imbalance, you got a ratio right here. It's telling you there's, at this time that there's some sort of stopping volume up there. And, ideally I want to get short, somewhere inside the zone. It does give you a chance here. It pulls back up, where my stop be? You said it's just going to be on the other side of this ratio. Come back up towards it again, as this bar closes, we get up here. Now this bar, it's got a ratio of 7. Sorry, it gives you a single print of 7 with a ratio of 37. And, again, it's one of those things where, you just, all of a sudden you're short and you have something, going contra to your position immediately after. It's one of those things that, makes you start to think like, oh my gosh, why is every time I get short, this happens to me? But, then you have a ratio going in the opposite direction. The fact that you couldn't get up here and take this out, this high is, it's in your favor in the sense that your analysis of this ratio is correct. And, we come right back down, take out this single print here, and, just work our way lower. So, again, I said I usually like to get about 5 points out of the S&Ps on a 10-range chart. So from 46.5, where did we come down? We came down to, just about, 41.5. But what's important is you're seeing single prints here now, so you know that these levels up in here are being rejected. And the market just, just works its way down, all the way down to 38.5. It turns. Nothing here in this ratio, in this ratio, in this ratio as we start to go back up. I wish there was every time the market stopped and turned, but sometimes there's nothing in there. And you have this next chart where it's just continuation. again, there's nothing in here that tells me that this move is going to continue. I mean, sometimes you don't catch every single move. I mean, you would love to, but unfortunately, the reality of it is you just don't always. Sometimes the order flow doesn't give you anything, and the market is rotating based on its own strength. And so we come up here to the high, and we're doing it on fairly strong buying. And then you get up here, it's a negative delta. It's minus 1,000. And then the next bar is minus 1,400 with a ratio of 145 and a single print. Now, I like to take divergences, and divergences are going to occur when there's a high or low made. But if you want, I've experimented with it a bit, is taking divergences, when swing highs and swing lows. And, this is a swing high, at 54, and you have a divergence, then you get the single print right after it. So, if you're looking for a reason to get short, after this move, there's your reason, somewhere, in the next bar. But, you got to be careful because it's not a high of the day. It's just a swing high. So, take it in stride with what you're trying to get out of it. So, I mean, the market did sell off, but then it just turned right around and then started going sideways, sideways to positive, in the sense that you have, a single print here and you have this buying imbalance now. So, had you gotten short off of this, the swing high and the single print, the fact that, you're staring at this next single print and this buying imbalance, is more than enough reason to get out of the trade. Now, if, should you be looking to get long here, you can. I mean, it's a little bit of a pullback into a move. I mean, I don't know, me, I probably wouldn't, just because, I tend to find that you make a swing high and you could go sideways, before the market starts to really show its strength. But, right now you're just sort of in the middle of the move. After the fact, yeah, you could say, yeah, you should have, but, at the time, it's not until here that you start pulling away where you see a ratio, a small print. Had you seen a small print here, yeah, I'd be more inclined because it would sort of confirm this single print. So, this one is, for me, is questionable if I would take it or not. It probably is one that's, you should think about taking. It's one of those where, you got a low risk trade. You're risking 1.5 points, to try and get about 5 points. So, I mean, if you like that, ratio, by all means, go for it. The market, it did, it popped up, from 50 and a quarter all the way up to 50s. What was that, 56? So, you would have at least gotten your 5 points. And you hit a level up here where you have some selling, some sort of, this is what it considers, this ratio bounds low would be considered stopping volume. Unfortunately, the numbers involved are quite small, 100, top of 36, 125 here. So it's not the strongest, the strongest number. What's interesting is you have a 0 in here, and, I'm going to watch to see in the next bar if we're going to come up and fill this area. I look at zeros as sort of gaps in the bars, and if in the next bar we can't fill that gap, I'll look to trade in the continuation of the market. But, I often like to see in the next bar what's going to happen. And what happens, the next bar we fill that gap, and we just start going higher. And, just up here towards the tail end, again, you've seen another buying imbalance. Again, it's not a buying imbalance I'd be normally inclined to take, just because we're on our way up already. We had a nice move, and it's sort of already had its move that I would like to take advantage of. If anything, the lower one would be more interesting to take than this one after a nice move already happened. Then what am I seeing here? Okay, I'm seeing a single print here. I'm seeing a ratio bounds low. I'm seeing another single print. And we're up here near this sort of, this high area after a nice move up. And, we're putting in some strong negative deltas, 1200, 1700, 1200, 900. If anything, I'm more inclined to want to be short, just because it's given me a lot of reasons to get short. It's negative deltas, price rejections, and I said we're up near a high. And what happens? The market just, slowly drifts down. So I mean, these are those three prints here before. You got the zero, you got ratio bounds low, and you have a single print. And then the market works its way down to a selling imbalance. Now, it's one of those where, am I interested to take it? Not really, because we already, we just sold off basically from 61, and now we're trading 51. It's a 10-point move. For me, it's not as not as strong as I would like. But I mean, I like to take things in context. I said I'd have much rather seen this selling imbalance happen much higher. And again, this is the selling imbalance. It just basically goes sideways on you. Had you been short on the pullback up in here, the fact that it's just going sideways, even by this next bar, I'd be by the last bar, I'd be looking to get out if I was still short. Just because when it's going sideways on you for I said this zone is five price bars. So if it's hanging around there for 5 price bars, chances are it's not working out, and I'm just happy to get out with with what I either a small profit, a small loss, or break even. And then the market starts going up. So had you been short, all of a sudden you see these bars, thinking, oh, now the move is going to happen. It's a little bit late. If it's not happening for me after 3 bars, chances are I'm looking to get out in the 4th or 5th bar, and then the market starts to eventually go up. There's times where I do that, then the market just goes down in the original direction. But after once after the 5th bar is formed, then the trade's not really going anywhere. It's really diminished. The more you spend inside the zone sort of diminishes it more. So the market starts to rally. Nothing here in as far as ratios that really get me excited. We come up to the high. It's 2:30 at this time. We're getting near the close of the day. Still, not much really to get excited in the order flow there. We just sort of go sideways going into the cash close. We hit the cash close here at 3 o'clock. And again, it's just going sideways. How you can tell it's going sideways is when you get the point of control sort of lining up sideways. Lining up flat for the most part is usually a good sign of it going sideways. Because you talk about taking points of control as support and resistance. But is it going to be your support level? It's going to be your resistance level. I mean, we're going sideways right now, so it's hard to determine. And then, the cash closes here. You see a lot of volume happen, and, not much else afterwards. So that's the end of day 1. Okay. Now on day 2 of the ES charts, again, it's a 10 range chart. It's February 10th, 2016. This is at 8:30 in the morning, Chicago time. It's the cash open. Usually I like to give the market about 5 minutes to work through their orders. You're seeing the market go sideways. You're seeing things happen during the cash open, and sometimes what you're seeing on the cash open is a bit of volatility. Why is the cash open volatile? It's because that's when a lot of trading is going to happen. That's orders that are given to the brokers from the institutional side. Lots of times they start at the cash open. They'll say, buy me 500 lots starting at the cash open, and participate in percentage of volume, or spread out, buy me 1,000 S&Ps over the course of the day starting at cash open. So you tend to get a lot of orders starting on the cash open. So usually I like to give it a few minutes to sort of work through some of these orders, and for the market to sort of determine which direction it wants to go. And it's not that I don't take trades during that time or look at what happens. Of course I want to look at where the price was trading. I'm just not necessarily going to be active in that time, because the market can fluctuate 5-7 points during that time. So as you see here, the market goes up from 58 all the way up to 63, back down to 57 during that cash opening time. Within that 5 minutes, you have a buying imbalance in there, which is, as these orders work through, sometimes they got a lot of volume they need to chew through to get the order filled. Why is cash open important? Because that's when the futures are trading, but that's when the underlying opens. So people are doing ARBs. The real money that has is trading the underlying, and they're hedging it in the futures. It will it'll work against one side of the market, will work against the other side of the market. So in the sense that if they're buying it in the cash, they're selling it in the futures, and vice versa. So as I said, usually I like to give the market 5 minutes or so to rest. So here, okay, we get through. So for me, I'm looking at what's starting to happen here. So okay, I'll take the range for the cash open. I'm always looking at seeing what I consider the low. So around 50, call it 56.5 and 63 is the range. And we're coming back down, starting to trade outside of the range of the cash open, and we get a selling imbalance. Okay, again, I often say, I don't like to sell at lows, and for a lot of people, their session starts on the on the cash open. For a lot of traders, there are futures traders that start their session when the cash opens. They only want to look at it when it's most liquid. So again, we're seeing a selling imbalance, and it's happening right at right at the low of what's since the cash opened. So I'd rather see a buying imbalance rather than a selling imbalance. And what happens? We do poke lower, but then we turn around and start to go higher. Okay, so is there any reason in here to be buying? Not yet. This one, you have a ratio here, but I'm not yet convinced as the market starts to work its way up. So we work our way up, then we just go sideways really quick. Boom, 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 boom. So I'm looking. Is this going to be my support level? Is this going to be my resistance level? Which way do I want to go? Do I want to be thinking about getting short or getting long? Well, I have a ratio here. This is the first ratio I've seen in a while. So, right away I'm thinking maybe I'm looking to get short. I'm not going to get short just based off of one ratio. And then what happens? We go a little bit lower, but then we just go sideways some more. Again, you have a ratio now on the bullish side, and we pop up, and what's happened? Now we're trading well above, clearly above these points of controls, even going back, before this. These points of controls are around the 65, 66 level. And then again, they're still around the 65, 66 level. So now, I possibly have a level of support. And, I'm going to want to see either, do I want to, is there any sign to get long or get short? So, right away, I see this ratio here, up here, as, we're trading above. But, am I interested to sell that? Yeah. I don't know. It's sketchy. I'm not yet convinced that this is going to be the high. Partly because the bar or the volume inside at these price levels are kind of thin. And when I see price levels in a bar, it's fairly thin. Less than 100 and things closer to 200, 300. It's telling me it's kind of thin. And oftentimes you'll see the market just snap right back. Like here, you see very thin numbers, and the market just snapped back in the next bar, and that's exactly what happened. So, if I'm looking for that snapback, again, I'm using this area as my support, but I want to see something in the ratio rather than just anticipating a snapback. And it snaps back and starts going up, then you have this buying imbalance, which, we're already making a nice move, and then you get a buying imbalance. Yeah, okay, I'm not necessarily looking. Would I trade that? Nah, I don't know. I doubt it. I said I'd much rather have it happen a little bit lower than up here. But the market, it does give you a chance to get in. It pulls back down to the 73.25 level, and it trades right up to 70, almost 78. So it is giving you about 4 points. I said I like to use 5 points. So it's just one of those that got up there, didn't quite reach it, sort of sold off again. And so, maybe I could have got, had I taken it, I could have got about, realistically, about 2 points. It didn't hit my level, and it just came back into this area again by the 5th level, the 5th bar, this zone, 5 bars, 1, 2, 3, 4, 5. If hit the 5th one, it's not working out. Chances are it's not going to work out. Then what happens? The market just starts selling off. You got a ratio here, but I said I'd prefer to see reasons to get short a little higher up, like in the previous bar up here. I'd like to see something, and unfortunately there wasn't anything in there. Okay, so then we start to sell off. Would I've been able to participate in this? The way I trade, probably not. The way some other people trade, probably. If you're convinced that we're selling off already, and you're seeing this ratio to sort of confirm the continuation, use these points of control as as your entry level. As for a pullback in there, like here. Okay, if you're convinced this is the high, and we're selling off already here, because you see maybe you see the deltas, you like these negative deltas. Look for a pullback into this point of control here at 73, 75. It gives it to you. It pulls back up here. Gets past it, even in this next bar, after this green bar. But then it's acting as resistance all on the way down, these points of controls. Then we come to a level, sort of go sideways again. You got points of controls lining up. Now you're seeing, these points of controls here as kind of negative in the terms, in the sense of price rejection up here, and we're working our way down. Then we get this we get this buying imbalance down here after this nice move lower. So what am I thinking right away? I'm thinking of buying. So we work our way down into this low, and we get that buying imbalance. Okay, so I'm looking for a pullback into this area here. So when you're in the middle of an area where you're just sort of going sideways, it's always hard to start taking trades. This first imbalance, look, I don't know, I thought it looked good, just as we had come down into a low, but then it just went sideways. Then you get this selling imbalance immediately right after it. So, had you been looking to get long, you have a selling imbalance here, so you got to get out. You're not going to all of a sudden disregard the selling imbalance. And, the market just went sideways. After that, I said, I'm not looking to take a selling imbalance after a big move. I do like this buying imbalance, but you have a selling imbalance right after it. Which, literally, 2 bars later, and they just sort of cancel each other out. And the market just continues to go sideways. We get a small print down here. So, again, it's, towards the bottom of the move. Even though we did go sideways, we did try to come down and test this low. But, there wasn't necessarily any follow through in the next bar. We went up, then came right back down. Again, you got a selling imbalance. Now, I said I'm more apt to take a buying imbalance after we make a move lower than a selling imbalance. And that's one of the reasons why I'm not necessarily interested in this selling imbalance. And then we start to rally up. Nothing here in the order flow. There's a single print, but it comes behind here where there's no print. Here you get a single print again after this high. It is nice. We had, sort of gone up about, almost 10 points, which, is a nice move. So, I want to look for a reason to get short. This bar up here, it did still have a very positive delta. In the next bar here, you got a strong, it's almost 1,000. It's minus 998. So it's fairly strong, but I would like to see this delta in this bar have gotten a bit smaller. Not necessarily be 800. If it was about 134 instead of 834, I'd look at it much different. And, this bar here is the bar, which just sort of continues on lower from this area. So it's not like strong selling coming in. Even though you do have a single print, I do kind of like that, but still, for me, to get short here is kind of a stretch. I'm not really interested in getting short. And, the market it comes off a bit, bounces back up. You have this buying imbalance. Again, it's not necessarily one that I'm really interested in. Had I taken it, I would have been stopped out. And, is there a reason to take it? Yeah, we had come off, but you know what? We had just made a nice 10-point rally, and we've come off, about 30%. So maybe if you're into retracements, Fibonacci numbers, it's about a 38, almost 50% retracement. So it is conceivable to take that buying imbalance and thinking that this is the pullback and the market can start to go higher, but it doesn't, and you'd be getting long somewhere in this area and just immediately goes against you. It's never in your favor ever again, and then it just would stop you out. So had you taken that, you would have been you would have taken a loss. And the market comes down quite nicely. And what you see here when you hit this low, you have this bar. You got very strong deltas here. It's minus 6,000, minus 4,000. You don't have a ratio, but you have this big strong negative delta. And what's interesting is you have this selling imbalance in this second slot here, which to me is very important. What it is it's telling me it's similar to having the selling imbalance at the low of a green bar. In this case, it's the second slot. And, I kind of treat them the same. In this case, it's in the second slot. And what's happening? The market is bid there, and it's quite a fairly decent bid. It's good, traded about 1,260. And it got through it for whatever reason. Went offered, and it traded, just below it, a small amount. In this case, only 70. Then it snaps right back up. Again, this is, I hate to use the term trap traders, but these people that sold it really in anticipation, looking for the market to sell off. Usually when you're seeing selling imbalances at the low of a bar, it's at the low of a red candle, not of a green candle. And when it is on the green candle, it's often good for a nice little snap back up, for 1 or 2 points, sometimes more. But, 2 points for me is fine for something like that. It doesn't usually go, maybe sometimes it'll go to 3 or 4, but you know what? For me, it's more of a short-term sign that, people were interested to push it in one direction or the other. In this case, try and push it lower, and it couldn't sustain that move, and the market just snapped right back up. You have confirmation in this next bar that, these prices down here are being rejected. You got a strong delta, and the market just moves up quite nicely. Comes up to this area up in here, and nothing necessarily strong in the order flow. And then we just sort of go sideways. The single print, you did come back up to it. What's interesting is you have this point of control here side by side, and we trade lower from it. You could sort of look at it as resistance, but then when you get the single print, this is your new resistance level, and we just sort of traded back up there, came right back down. But really, other than that, there's not a whole lot, during this time period. As you go forward a bit, yeah, you're moving up. I don't really see a lot to really get me excited. And I do know we're in an uptrend, but, I like to have ratios. But, how do I know I'm in an uptrend? Well, take it back, just from this low here in this previous bar. Where's the point of control? Here. Okay, this bar came right down to it. Where's the point of control? Here. This bar came right down to it. Okay, go forward. You have a red candle, then the green candle, where did it come down to? It came down, just a little bit through it. Here, it came down a little bit through it. Got a couple side-by-sides, yeah, okay. Is it going to be support or resistance? Well, I don't know. Let's see. The next bar, opened up down, but closed up. So we got on the other side of this point of control, and the next bar is up. That's sometimes that's how I can tell if we're in a trend. I'm watching how the point of controls step up. And we're just sort of, hanging around, steadily going higher. You see these point of controls here right at this level. What is that? 1868. But at the same time, you also have these point of controls almost around the same level. So, you want to see which way it's going to really continue. You see it here. It starts to pop up a bit, and it pulls right down into this, just above this point of control. So you want to see what's going to happen next. Is this market going to continue down and back into this area in here? And what happens? Yeah, so I mean, we do push a little bit higher. Point of control is a little bit steady. Then again, there's nothing in the ratios really telling me to get short. But what's interesting is we hit this high, start to come off. We're starting to build negative deltas on the way down. You have a ratio small print here. And then you're seeing in here, you don't see anything, but you're seeing the market pull back up towards this small print. Okay, and then you have a single print with a selling imbalance. The next bar pulls into it. This is one of those things, I said I'd like to see the selling imbalance happen closer to the high rather than, the high is at 71 and, it's happening here at 64, which is, a 7-point move already. I like to try and get 5 points. So, if I'm going to make 7-point move and then tack on another 5 points to it, you're looking at 13-point moves, which isn't necessarily something the S&P does, fairly frequently. But what I do like is, you have a ratio here and you have a ratio here. So I said I'm inclined to give it a chance, having the ratio in the candle that you have the imbalance. So what happens? It comes off, right? It comes down, from 64 down to 60 and a half, rallies back up, right up through it, and then back down through it again. It's just one of those that just didn't work. Really, it had sort of the setup that you're looking for. It had the imbalance. You have the ratio. I said, it's just one of those things where it's just, I felt going back here, you already had a big move, 7 points. And I said, if you're trying to get an additional 5 points out of that move, I feel you're just a bit late to the party. What would have been better is trying to get short on this pullback up towards this small print here. At least that would give you an extra 3 or 4 points of the move. But, I said when it's, happening a bit far off from the swing high, it just, I don't know, it just doesn't feel as good because you're really looking for a really strong move lower. And I said, to get intraday swings of, 13, 14, 15 points in the S&Ps isn't something it does on a consistent basis. And then, what happens? Market just goes sideways. And just go sideways again, some more sideways action. We pop up here, and, it's kind of a high. What is that price? 1867. Going back to the previous bar, the previous high here was 1866 and 3/4. So we just took out that high by a little bit, by about a tick or so. And, it's got a small delta. And then what do you see? You see the next bar, the delta is negative, and you've got a ratio, a single print. And I like to see, sort of a swing high or swing low, then sort of a change in the delta. And here it's small. It's not, 369, and it's on the back of this other bar of 388. I mean, however, it's not like a big move. We sort of came up to, from 61 up to 66 and a half, down to 61, and we're going back up, from 61 back up this time to 67. So it's and I don't know, it's borderline being in a range, but we start to come off from the high of the range, and you're seeing, a single print and a ratio. It's debatable if you're interested to take it, but I do like that where it's sort of a swing high. But it's just, barely a swing high. It's not like you had a nice move up, a straight up move. We were going sideways, up and down, or down, and then up, then down, then back up here. Now we're starting to go back down. If you could try and get a good entry somewhere, closer to this point of control, if, before we're trading at 61, so you're thinking, if we're going to start to come off, where's our first level? We're going to come back down to 61, which is the low from just earlier. So like I said, if you could get something, close up to the single print, I mean, obviously we didn't get up there, but, anywhere around the point of control is a fair entry. So, you're looking at 64, 64 and a quarter. And, you're looking at a target of around 61 at a minimum. I mean, it sold off very nice to give you at least a 5-point move. But, I mean, if you get short at 64, looking at 61, that's 3 points. Your stop would just be right above the single print. So, you're looking, short from 64 with a stop around 65.5, trying for a minimum of 3 points. So in the market did. It came down from, down to 57, 56, started going back up. There's nothing in this low here to get you interested. It still has a strong negative delta. Start working our way back up. You see a couple strong deltas, 3,000, 2,000. Here you have a ratio. You got a single print. And, we come back up to the 65 level, which is a little bit lower than the high from earlier at 67. But, what are you seeing now? You're seeing a couple of things. You see a strong negative delta, and you're seeing a buying imbalance in the second slot. So again, you're moving up. Take everything in context. Moving up on strong buying, positive delta of 3,000, positive delta of 2,000. These people that are buying it, they're still interested in buying it, and you see a buying imbalance up here at the high. But what happens? It just stops, and the market drops. And, you're seeing selling imbalances in the bar, and you got a strong negative delta. This is a sign to think about getting short. If you're not convinced yet, wait for the next bar. And you're seeing a single print, okay? And, what's happening? Again, still a negative delta. It's a small one. It's not a big one. But, it's still negative nonetheless. So, you should be looking to get short, in this bar. Or, at least in this bar at 14.14, 214. And, we do pull back. Like I said, ideal entry would be somewhere up near the single print or the point of control. And, we come back up towards it. Unfortunately, we get only a tick, within a tick of it. And, we just, I think it's a good trade. You got already two single prints, and it's coming off nicely. Now you got 3 single prints. Okay. And, what's the market telling you? It's telling you that there's strong selling coming in, and buyers are rejecting this area up in here, all this white area. Now, one of the trades that I like, I spoke about it a little bit in one of the courses, was the 3 in a row. However, I do like to get a pullback. Right now I don't see that pullback, but I like to see after 3 3 ratios on the sell side, I like to see, a contrary bar here, a green bar. So you have 3, in this case, you have 3 reds. Right now you've got, just 1 red. So it's not, you're not getting, you got a pullback, but it's not the green bar that I'm looking for after 3 red bars. I say 3 in a row. What I mean is 3 ratios, not necessarily 3 red bars. If it's a bearish one, it'll be 3 ratios on top of 3 red bars. If it was a bullish one, it would be 3 green bars with ratios underneath it that I like. And for the 3 green ones, I'd expect a red bar. But what you're seeing here is, is a further red bar. So you're seeing quite a bit of selling come in, and it's still continuing. I really think the time to get short is up here where you have this buying imbalance at the high. And even when you have this, when you see this selling imbalance, if you didn't get short because of this, in this candle, it's already telling you to get short. So, you should be really have been short already by the time this bar forms and this bar forms. And the market just sold off, from that 61, 62 level, and you trade all the way down. It was almost a 10-point move from, just go back, step it back here. I was telling you here, although I'm not looking for this to be, the start of a 10-point move, when you're seeing, additional confirmation come in, I think, the move extended itself when you're seeing, very strong deltas come in. So, I mean, normally I'd take this as 2 or 3 points. I try to get 2 or 3 points out of this. But then when I'm seeing more negativity coming, I'll say negativity, more selling come into the market, it's really, something I could either extend it or get shorts again and try and catch an additional move. And we came down, down to 53, down to 52. And we just sort of went sideways after that. So there wasn't, much, if you didn't necessarily cover down here, you should have been looking to cover somewhere in this area. And then you get a buying imbalance. Okay, now, this one is tricky because, I do like it. It's after a low. You worked your way down, quite nicely, and you have this buying imbalance in here, which I am interested to take. It's come after a nice move lower, and I'm looking to get long somewhere in the zone. It's a nice spread out buying imbalance of 4 prices instead of just 3. But one of the things hanging over the bar is a negative delta of 259. You do have a selling imbalance towards the low, which I prefer it in one of the bottom 2 areas. And, the third level, it doesn't really matter that much. And it did give you a chance. To get long in here at what is this, 51.5. Where you're going to put your stop. The first level I'm going to look at is in here at where this point of control is. And, worst case scenario stop is going to be right below this low. So, it's one, it started out, it didn't necessarily work. It came down. Actually, it did work. It came down, rallied back up. And then the next candle just immediately goes straight back down through it. Now, one of the problems with these imbalances, stacked imbalances, is the amount of time you're spending on the other side of it. I said, you're looking to get to buy, right, on a buying imbalance, stacked buying imbalance. You want to get long. You don't want the market to spend a lot of time underneath, where you got long. And how do you judge that? Well, you judge it, for me, the simple, I'm a simple person. I judge it by how many bars we are where it's below it. Which to me is usually a sign that it's not going to work out. If I'm looking to buy it here, I'm looking for the market to maybe in the first 2 bars, hang around that area, then make the move up. But, if we're hanging around that area, and even in the 3rd bar, we rally back up through it, and then immediately come back down through it on the other side, it's telling me that the market doesn't want to, it's not supporting this buying imbalance, and, you should be looking to get out. And, if you're not out by now, you're going to get stopped out a little bit later. And then you get the selling imbalance. And, and the market just, goes a bit lower. And, lower to sideways. Do you want to take it? No. I said we already had made a nice move down. So I'm not really interested in it. Because we had already gone down and far enough. And, but now we're starting to go sideways. We're coming into the cash close at this time. Is there anything in here? Nah, not really. You do have a ratio here, but, it's going into the cash close, so I'm not necessarily, too keen on it. Then we come into the cash close. We're sideways. You cash close, you get the most volume, 73,000. And then the market just sort of tails right off. And, that's it for the day. Okay, so moving on, this is day 3 of the E-minis. Again, this is a 10 range chart. This is February 11, 2016, and the cash just opened. You can see it here at 8:30, and where's the market? It's starting to go up a bit. There's nothing necessarily here on the cash open. I said I don't get too excited around the cash open. I sort of want orders to sort of work their way through the market, and the market to settle down and decide on which direction it's going to go. Okay, so we sort of rallied up to a high. We've come off, starting to come off a little bit. And what do you have? You have this high here at 1824, which, before we sort of poked our way up, we got up to 23. Now we're, just got on the other side of it up to 24. And, you have a negative delta. And the bar before it, you had a negative delta. In the bar after, you got a small print. And what happens? The market rallies right up to the small print, gets within a couple of ticks of it. We're well above the point of control. So it's giving you an entry somewhere between the point of control and the small print. Ideally I'd like to get 5 out of it. So depending on your entry, it would be better, it would be up to around 22, but, realistically you get, 20 and a half, 21. Where's the market going down? It went down to 17. So, it's not, it's not the 5 points that you would like. It only, but it would give you a couple of points. You sell off quite nicely, but then you hit this green candle with the point of control right at the same level. And it just rallies right back up to 19 and a half. That's your first sign that you should be thinking of getting out. And the next bar, it comes back down, but then it rallies back up. Okay, so, if you're already thinking of getting out and you haven't, this next bar should be sort of a sign to be looking to get out around the 19 and a half level. Okay, say you're still not convinced in this next bar, you should at least, really have thought of, moving your stop at some point. So I'm not a big advocate of, trailing stops, because I often find that, people like to move their stop to break even right away, and I think it, in the end it sort of hurts them. But, when you make a move, right, and it doesn't go all, towards your, doesn't go all to your take profit level. Like I said, at 10 range S&P, I like to get 5 points. So, if I'm short at 21, I'm looking to cover it at 16, but it only comes down to 17. That's a 4-point move, which is significant. It's not the full move that I would like, but it's a move nonetheless. And, it came close to coming to my profit level, but it just missed it by a point. So, at that point, I'd be interested to start looking to take profits while there's still profits to be taken, as opposed to scratching or taking a loss. Because, it may go sideways, but, I'm really looking for the quick move to my target rather than sort of come down, get within a couple of ticks of it, then just go sideways and then make the move lower. I'd much rather see the move directly to my profit target than, just sort of hang around a couple of points and then start moving slowly in the other direction. So, this is here at 844. So, if you're not out already by, somewhere in this 819, by 820, you should definitely be out. Once we start trading back up to these points of control, this point of control here, you should, definitely be out. And what happens? The market, just moves right up. This is the 1820 area I was telling you about. And we just, go up. We hit a high. It's just kind of an average high. Nothing special about it. It does have a small delta. Then, the deltas get stronger. And the market does start to sell off. You have a buying imbalance here. I said, we had come up into 1826. Our low is 1817. So 1817 up to 1826. Pull back into 1820. So, how many points is that? All right, that's almost 10 points. That's 9. We get almost it's about a 50 to 60% retracement. If you're into retracements, say you're a fib trader, right? You like those levels, and you have a buying imbalance here. You might want to, you might be interested in it. It's far enough away from the high. It's 6 points off the high. If this buying imbalance was happening here in this bar, or even this bar, or even in the bar in the high, I'd look at it different. But it had a nice move, and it sort of stopped in here, and it stopped around this other area where you have the single print. And it's something to think about. I'd be interested in it. I don't know how it turned out. In the next bar, we came down. We pulled back into the imbalance, and just sort of took off. I said, it's one of those. You got to take it into context of the market. The market just had a move from 17 up to 26, pulled back about about 60%, and is putting it in imbalance. So I was just showing that buyers came in there. So it's up to you. I said, if you're into fibs, or you like to do retracement trades, then it's something that you should definitely consider. And this one, it worked out. Yeah, depending on your entry, usually I like to go in the middle of of the zone, but so it's debatable if I would have gotten filled there. But it put in a nice move afterwards. then it comes up to this high here at 1833, but you have this buying imbalance here. Okay, like I said, which buying imbalance would you rather take? Would you rather take this one down here at 1820, or would you rather take this one up here at 1830? Of course, you'd rather take the one at 1820. After here you make your move lower, then you get the buying imbalance, as opposed to making your move higher, and then you get the buying imbalance. I'd much rather be interested in buying it after a move down than after a move up, because yeah, you can make new highs, but what's the capacity to make new highs? Or continue in that direction. You got to get through a lot of area, whereas after you've come down, you know that oftentimes the move back up can be pretty easy. Because you're not sort of breaking out of any sort of range. You're sort of retracing back into the range. Could be retracing back into value, as price likes to rotate around value. Okay, so we hit this high. There's nothing up here, no ratios. I'd like to see ratios when you hit highs. Either in the first bar or the second bar. You got negative deltas, which is okay, but other than that, there's not much else. The market just sort of drifts sideways to lower, and then turns around, starts to come back up. There's not a lot in here as well in this time period. Yeah, you do have a selling imbalance here, 88. It's not the greatest one, but it is one of those selling imbalances in that slot. I'd prefer to see it on a low as opposed to sort of in a bar in the middle of a move. So I don't know. That one isn't really that interesting to me to take a trade off of. Yeah, you got a single print here. We'll see if this, if the market's going to come back down to this 1828 level. It does. It comes back down to here, a bit later. It sort of hangs around that area though. But again, nothing here really showing me in the order flow. Okay. Now this is interesting. So, we're going sideways for the most part in this, the previous chart. Okay. We're sort of sideways here, but it's lower than this area that we're just in. And then the next chart, we're still below that area, a little bit going sideways. You have a small print here. Okay, nothing to get excited about. But then you get this big buying imbalance right here. Okay, to me, this is interesting. It sort of comes close to the area where you have the small print here, and then it comes back up and you're getting some stopping volume here. And the market initially does react off it. The next bar comes back up towards it. The fact that we haven't gotten through it yet is still encouraging to me. I still like this level here, an area to get short off of. I don't know if I can get short off of this exact level because the market oftentimes won't come back up. But I'm looking at this point of control, as ideal. But usually on a setup like this, I'm looking for a quick sell-off, and I'll be looking to get short around here. Maybe around the 25.5. If I was really patient, 26.5 would give me a much better entry. And then what happens? The market, we make a run, but we go literally right back up to that level. Okay, don't get through it though, which is still nice. But I said, I could be short anywhere in here. This 26.5, 25.5 level. And, the market pushes down initially down to 22.5. You're thinking, oh, happy days, right? But then the market turns, and then you get a buying imbalance, which sort of mucks it all up. But, usually this setup, I'm looking for, like I said before, I'm looking for 2 to 3 points, which you did get out of it. But, if you were looking for a little bit more based on, sort of you thinking, well, you stayed below this small print this time, and then, the market rallied back up and, still held it. I don't know if you'd want to make your view wider, but usually I'm looking for 2 to 3 points out of this, and it did give me that opportunity. Then the market hits this low, okay, and then you get a buying imbalance. Now, this bar with the buying imbalance, you have a single print, okay, which is nice. That's what you want to see. So you're looking to get long. I said it's off of a low, and you're looking to get long in here, right, at 26 area. But the problem is, you're staring right in your face is you have a single print going against you. So, you just know right away the trade's not going to go in your favor. It's one of those things, markets can move very fast. And, you don't want to get long when you're staring at a single print, right? As you're getting along. It's one of those things where, you're getting long on a bullish signal, but then you have a bearish signal soon after you get long. The trades just don't work out. So if you see something like that, normally I don't wait to get stopped out. I just try and get out as quickly as I can with trying to minimize the damage. And you see it just falls apart right after that. So, we come down, and then what do you get again, right? So this is where we were before, right? We have this selling imbalance, this buying imbalance, and then the market sells off from 27 down to, down to here, down to 19.5, and you got this selling imbalance in the second slot. Again, the market moves up nicely off of that. I don't say off of that, but oftentimes when you have that, the market moves in the opposite direction from whatever the imbalance is in that slot. But other than that, there's not much else to go off of, as far as a trade here or a trade off this high. We work our way down. You have a single print here, but it's sort of in the middle of a move. This move's already happened. There was nothing up here, nothing here. The deltas are still positive, so, it's for me to take a trade based off this. I'm not interested. You just sort of go back up, back down. It's just sort of going sideways. I can sort of feel it with the way, you got the point of controls at the same level here. Here, they're sort of the same level. I'd sort of expect more or less the same over the next few, the few bars following it. I'm sort of, at this point, I'm looking for something to sort of give one way or the other. Right now, I'm just not seeing it. These are just regular prints, regular ratios. Okay, so, you come in here, again, they're still sort of in the zone, and then you get this selling imbalance. And, it's one of those things, we're still in the middle, for the most part, of a range, right? What's the low here? 12.5, 12, up to 18, 18.5. And you have the selling imbalance happening literally right in the middle. I don't know, it's iffy, because what's the high from earlier? The high is 20, and now you're looking at, a slightly lower high, then you get the imbalance. So it's one of those things that it's really hard to, be interested to get short, but, I don't know, it's a borderline one. I'm not sure if I would take it or not. In this case, the market did open up lower, rally back into it and sell off, and, it did give you the 5 points that you would like. Okay, so we hit this low. What's important is we hit this low here and you have a ratio. Okay, so 33, it's indicating a small print. You have a nice, big, strong positive delta. This is what I like to see. It doesn't necessarily have to be the low of the day. It could be a swing low, and you're getting a low with a positive delta and a ratio. That's what you like. It's one of those hidden divergences, so to speak, where, it's, people just look for divergence at at daily highs and daily lows, but it can occur when it's, intraday on a swing low or a swing high. And, say you're not yet convinced with it. I mean, even though I think it is kind of a legitimate one, as you're coming into the low, you have a positive delta here. It's a slightly negative delta here with minus 1700, but it's still, less than what you're seeing here. Then you see the shift in supply to demand with big, strong positive delta. So say you're not convinced with that. Look to the next bar and you're seeing the single print form here. And it's really telling you that, hey, this could be the swing low, to look to get long. And, if you missed your chance to buy in this bar, based off of what you're seeing off the low, you have the chance in the next bar. It did pull back towards the point of control. So, realistically getting in around 18, 11.5, 18.12 is a fair price to, to get in at. And, market went up to, 16, 15.5. So again, it's one of those, depending on how, whether you're able to determine it early enough or not and get in, here at 10, or, get in a little bit later at 12. it didn't go up to 17. It only got up to 15 before you hit a ratio, which, when I'm in a trade, say I'm long, like here, and I see a ratio forming, sort of towards the end of the move. Like I said, I'm looking for a 5-point move. So say I'm looking at 17 as my exit. Say I'm long from 12. I'm looking out at 17. And we only get up to, 15, and then I see a ratio. I'll say I start to worry, but, I start to wonder, are we going to get back up there or not? We're going to get back up to, the level of 17 that I'm looking for. Most often it doesn't happen. I mean, that's just the reality of it. And, I'm going to look to get out somewhere, at a reasonable price rather than take it back down to my entry price. I'd rather book a profit than, book a loss. So, but another thing that's interesting is you have this ratio bounds low, then you get a single print here. So, normally I'd like to get short off of this, and, and I'll say there's no reason not to. Then, I'd be looking to get short literally in this bar here. So even if I was long, I'd definitely should have gotten out when I see this here. So, I'm not necessarily one to just reverse a position. I'd rather reverse and then wait and see. So, had I not been already in a position, yeah, I'd be looking to get short in this bar. And, my entry would really, be dependent on where it's trading. Ideally, I'd like to get short around this point of control. Or obviously, I'm not looking at this single print just because it's, it's coming on the back of this ratio bounds low. So, it's one of those things where it just sort of ticked up there twice already, so I'm not looking for a third pullback. Usually when you get a third pullback, it could either be hit or miss completely. But, so if I'm looking to get short in here, ideally I'd like to get short somewhere around this point of control. So if I'm working an offer, I'd be staring at this ratio. So, I'd probably be inclined to cancel my offer. But, if I was aggressive and got short, just early in this bar, when I see this ratio here, then again, I would start to, look at it more closely and decide, where's my stop, or do I want to stay in this trade? My stop would be up here just above this, this high area. It's two different price levels, unfortunately. But, at worst case scenario would be my stop would be up here above 15 and 15 and a quarter. But my first stop level would be, this point of control. And, I'm watching it to see if we're going to come back up. I don't like if I get short where immediately, again, I'm staring at a ratio that I don't like. And then what happens? The market just goes right up through those, sort of starts to come down. So, if I said it depends on your entry, where you're going to get stopped out or if you're going to try and scratch it a bit. Then the market goes up. There's nothing in here, really, to tell me to get long or short. Yeah, we come back up. You have a buying imbalance, again, just off the high. I do like that for a couple of ticks. It depends on your entry, of course. A couple of points. Ideally, I'd like to get, a better entry, but, oftentimes, honestly, with these, I find myself just sort of getting short, towards the end of this bar if I really think it's going to hold. Even though I tell you wait for the bar to close, sometimes I do supersede myself. I do also succumb to getting a little bit eager. But, it's one of those things where, try and finesse your entry a bit, because you're trying to get a couple of points out of it. So, you want to limit your risk, and your risk is just going to be on the other side of where the imbalance is high of the bar, where the imbalance occurs. So, you don't always get a pullback up towards it, or even to the point of control. Sometimes you get no pullback and the market just sells off. So, it's one of those, you got to be, sometimes, depending on how aggressive you are in your entry, you can either get it or you cannot get into the trade. If you were aggressive, yeah, you could have got 2 to 3 points out of it. If you were semi-aggressive, yes. If you're very aggressive in this case, most likely. But, like I said, sometimes you're not going to see a bar like this. You're just going to see this bar, then the market immediately sells down. Okay, then, again, we just sort of go sideways. Not much in here to get me excited about. Where are we trading? 18, 10 and a half. Okay. Then we get a buying and balance up here. I don't know. It's one of those. It's a little bit off of sort of the low area that we had been in before. Low of a range. So I don't know if I'm interested in taking it. And if I'm trying to buy it back on a pullback in here, there is no pullback, so I wouldn't have gotten in. People have asked, is it more important if the buying and balance appears at the bottom of the bar or the middle of the bar or the top of the bar? Not necessarily, although when I do see it appearing on the bottom of the bar, it does look, I'll say, more special. But it's telling you that there was a lot of buying in here early, and the buying that was late and the selling that was late, the selling wasn't enough to push it down back in here. So you would think, in theory, you do have the propensity to go higher. And then again, you get the buying and selling imbalance right here in the green candle, right after you sort of squirt up, come back down, and turns here. So yeah, you could look for another short-term trade. Okay, then we pop up. You would have got your 2 to 3 points off that imbalance. And we're stopped up here. It's not the biggest ratio. It's indicating the ratio bound's low. So based on the numbers involved in here, it is, even though it's not, doesn't look like stopping volume, it is for the most part. What you're looking at, you're comparing these top numbers, 35 over the 3. And we come down here, and then you get another selling imbalance right off this low. Again, I'd look for 2 or 3 ticks. In this case, it didn't work out. More often than not, it doesn't work out, and it just stops you off. But where's your stop going to be? Your stop's going to be right below here. It's not going to be 2 points past this. It's going to be right away. If it doesn't work out, it should stop you out fairly quick. Then the market just goes sideways. You get a buying imbalance, but again, you're sort of in that sideways zone. Market pops up through it, comes down, and again, you're already 2-3 bars inside it, still hanging around. And if you got long in here and you have a stop down here, and you're spending the second bar and even the third bar, and just look to get out. Don't wait for it to stop you out. You should be able to tell that the trade is not working out. Okay. Now the market comes off, and you're getting the selling imbalance. Yeah, it came back in there, and then came off, which is what you want to see. And then down here, you're seeing a buying imbalance, which is something that is what you want to see, right? After a move lower, you get a buying imbalance. You pull up inside of it, here, and you get a single print, which is indicating to you, hey, the market is poised to go higher. So you want to get long somewhere inside this zone. 1813 in the middle. It only traded 6 lots, so it's debatable if you would have gotten filled. And so it goes higher, squirts up, then comes right back down into it. It's one of those. It just, again, it didn't necessarily work out the way you would have liked it to work out. And so I said, your stop would just be here. It'd be a tight stop to stop you out. And then what happens? Then immediately you get a selling imbalance. Which is still on the 4th bar from the buying imbalance. And then again, it just sort of goes sideways. I said I'm not necessarily interested in taking this because I know we had sort of been working our way lower. That's not to say that we can't just continue lower. But, I'm just sort of wired a little bit differently in that case. Then, we pop up. So, even if, you had gotten short, I said I'm not one to want to get short in here. Where's your stop? Your stop would be up here. But what do you have up here now happening? You have a buying imbalance in that second slot here. And like I said, it's one of those that I'd like to, get short, based on somewhere around the point of control or, up here. But, oftentimes it doesn't come up to that imbalance. In this case, it just sort of came back in between, but realistically, getting short around, the 10.5 level is realistic, to try and get 2 points, which it gave you. And then, as you're going lower, you get another imbalance. Okay, and this time it's just right off the low here. And again, this is why I don't necessarily like to take selling imbalances as the market's going lower. because yeah, sometimes they work out, and other times, the market just stops there. And you see here, boom, you come into the low, and it just stops. Boom, you get 1,600 lots. You got a nice ratio bounds low here, telling you there's some stopping volume down here at the bottom of this bar. The bar has a small positive delta of 48, which is, not the strongest positive delta that you would think the move is over. But, say you're not convinced and you want to wait, you wait for the next bar, and what do you see? You see there's no ratio, but you're seeing a nice positive delta, and you're seeing buying imbalances. So it's indicating, there's aggressive buyers coming in there. And, you got to act fast, because this is 1338. This is all these three bars are in that 1 minute. So, if you're not reacting fast, you're getting long here at 1339, probably around this, 1813, 1814 level. And, the market rallies up to was at 1819, and you're seeing some small prints, single prints. So, you got to be fast sometimes, when the market turns pretty quick, like it did here. It just came down here right at 1337, 1338 and turned up. And, you're seeing the strong deltas, 48, 1472, 5000. This is all within a minute. You're seeing, the market went from a negative, 38 delta minus 1869 to, if you add these up in this 1 minute, you're talking 7,000 positive delta. So, buyers showed up in force, and they took the market higher. Nothing up here to tell me, the move is over as far as, ratios, but, you would have gotten your 5 points at least. And the market just sort of starts to go sideways. I said, after a move up, sometimes the market comes off and goes sideways. There's a single print here, but, other than that, there's really not a whole lot. Okay, then the market starts to break out. You get that single print down in here in this bar it was, and the market works its way up, and you come up to this high level. You got positive delta 1500, 1100, 1100. You hit this high, swing high. What happens? You got a strong negative delta. There's no ratio up here. It's just a normal high, but where's the follow through? Where's the next bar with positive delta of 1100 instead of having minus 987 negative delta? Like I said, I'm more inclined to want to get short on it, a move after a move higher like this. And so what happens? Okay, market comes off. I said I like to get short somewhere inside this zone. It doesn't give you the chance initially. It does go lower, starts to come back a bit, and it's in the third bar, which I like to see. Within the first three bars, give you the chance to get in. If this bar is still below here, I'm not necessarily looking in the fourth or fifth bar already. I don't consider this a move yet, from 22 down to 19. That's only a 3-point move. If, this, I said, we're looking at much lower down to like 17 or 18 and then pull back in the fourth or fifth bar, I'd look at it completely different. But, it is, what happened. So, it happened in the third bar, which is fine for me. You do have a ratio. So, you're getting short here at this 21.5, area is it came back for you and then sold off again. So you're seeing these sellers, at least for now, come in again to sort of push the market back down. So, 21.5, you're looking down to, the 16.5 level. It just worked out just nicely. Came down to, was that 16. But then what do you see on the way down? You're seeing ratio. Okay, and another selling imbalance. So you might want to think, this is one of those cases where I talk about overthinking, where you see this ratio in here, these three in a row, and you're thinking, hey, I should still stay short. In this case, it didn't work out, worked against you, because this market turned and you got a buying imbalance here. And, it's literally at the same level where you just had a selling imbalance, and the market starts to rally. Now, I just gotten short because, we hit a high, we got our 5-point move, then you get a buying imbalance. Do you want to get longer? Do you want to stay on the sidelines? You could get long. It's a legitimate long. if you can get longer on this 18 level, 18.17 3/4, it's worth a shot. And the market rallies back up. So it gave you the chance. It presented itself. Again, you got to be pretty quick though, because it happened within probably about 30 seconds. Then you come up to this other area here where you got some more buying imbalances. Would I take them? I don't know. But what's interesting is literally at the same level, you have another buying imbalance right afterwards. But it didn't give you that chance on the pullback after the second one to get in. Really, this is the better one to take rather than after a 5-point move. And then, it did go up. Eventually in the fifth bar, it came down into it. But, already by then, I've already sort of lost interest to really get long. In this case, it did work out. But, that's how it works sometimes. And, what happens? You work your way up. You get this buying imbalance right at the high. And again, it's one of those that I do like to short. And what happens? It doesn't give me the trade. It just goes against me. That's fine. They don't always work out. You have that buying imbalance just right ahead of it. And, it's one of those things, it just, that's why you have work on your entries, right? So if you say you're getting short around this 27 level, your stop's just up here at 29. So it's giving you a fairly tight stop, about 2 points. And, you're usually getting 2 to 3 points out of that move. Then it just goes sideways. And just a little bit more side. We come up again. You said we poke up to this high here, and you get the single print right after it. This was, well, it's not the highest. It's just below. 32 is the high. We 32.5. Come down, then we come up to 32, which is here 32. So it's not necessarily the high. It's a little bit below the high, which is if it's a tick off the high, it's still interesting to me. Then you get the single print. Again, it's telling me maybe the market's getting ready to sell off, because you do have the negative delta here, and here is a relatively small delta. You're working your way up on, you have a negative delta here and slightly less delta in this bar, and a smaller delta here in the sense of 400, although I'd prefer to see this 400 here and this 105 here. But you can only trade what the market gives you. So, then you have the single print here. So I'm looking at this to be a resistance level. So I'm looking for the market possibly, I'm not looking to get short right away. I'm looking maybe for the market to pull back up into this area to get short. And it does. It pulls back up to the 30.5 level. And then sells off. Okay, then you get this selling imbalance. This was the selling imbalance here. And then it's immediately followed with the buying imbalance. This is where things get tricky. Once you start running into opposing signals, literally. So, I don't know if I would have gotten short here. Getting long here, I'd probably be interested, because I have the selling imbalances at the low and I have the buying imbalance at the bar, the stack buying imbalance. So I'd be looking to get long somewhere in here. But then when I'm staring at this, two buying imbalances, I'm looking to get long off these two selling imbalances, but then I'm staring at the opposite thing. So, even if I'm getting along in here, I should really be thinking about canceling my bid before it comes down here and fills me. Because, if it's going to move 2 to 3 points against me, I don't want that. So, I said if it did fill me, then I just have to look to get out as soon as I could. Then, we come down into this low here. And, it's got a strong negative delta, 1200, right on that low. Here you have a positive delta and a ratio. So, you don't have a divergence there, even though it's a swing low. We just work our way up a little bit, and then we continue our move down. Again, you get the buying imbalance right at the high of that bar, which is enough to, sort of clue you in that, maybe the market's going to go a little bit lower. We're coming into that 2 o'clock time, so we got, just a couple more hours for the day. But we work our way down, and then what happens? We get down to this 18.16.5 level, which, is sort of, considering that we're up here around the 30 level and above, and we come down, we make a nice move lower. It's almost, 15, 20 ticks lower or 20 points lower, and we get a buying imbalance all of a sudden, which is what you want to see after a long move down. You want to see the buyers start to get aggressive. And then again, what happens? It gives you the chance. It pulls back inside, and then it makes a nice move up. In this case, would you gotten filled if you're trying to buy it in the middle? No, probably not. 19 lots traded. And again, you'd have to be very quick to have gotten in. And if you're just sitting there waiting on your bid, you wouldn't have gotten it. It just rallied right up. So, if you miss it, what's your options? One, you can chase it, but if you're chasing it, you shouldn't change your profit target. Say you're trying to get long here at 18.18, your profit should be, 18.23. If you're getting long in here, are you going to make your target another 5 points from where you're getting long? Or are you going to keep your original target? I think it's more prudent to keep your original target when you're getting into a trade late. Then we work up to a swing high. Nothing up here. You got a negative delta. Okay, no ratio, no ratio. Here you have a ratio, but it's just a little bit further out. It's debatable if you really want to be getting short there. Just sort of go sideways. Got a couple buying imbalances appearing in there, but we're sort of up near our highs already, and you're seeing some buying imbalances. I don't know. It's a bit dicey. It may still go higher. But it's hard for me to want to buy around the highs. In this case, the market did come in, it filled it. All right, so say this is the second imbalance, right? You're seeing right here, this 52.69, 576 came in here, filled you, so you'd be long here, but then it just goes and stops you out, and before moving in the direction that you had wanted. You're seeing some negative stuff in here. You said you're spending a heck of a lot of time underneath the area that you're buying it, so it takes guts to stay with the trade that long, where it's spending all its time against you. When it rallies back up there, sort of a couple times, it gives you the chance to get out, and then it doesn't. And it's just one of those things where I'm looking. If it's by the third bar, it's still against me. I'm looking to get out. But the market did rally, and just sort of continued to rally up. We're going into the close now. We're starting to go a bit sideways, and cash close is here. We work our way down, and then we close for the cash session. So it's just one of those days that there were some opportunities, but it doesn't always. You saw some winners, you saw some losers. That's how trading is. It's not all trades are winners. So moving on, I'll go to the bond charts. This is day one of the bonds. On the bonds, I'm using a 4 range. This is February 2nd. Again, I tend to start around 7 in the morning. 7:20 is the old pit opening time. And, what do you see? What are you seeing? You come down into the low, you get a single print, right at the low. And it's a little less volume than you had earlier when you hit that print. And then the market, this is a Monday. And so usually on Mondays, there's nothing coming out. Or February 9th is a Tuesday. You should know what's coming out on the calendar. If there's anything at 7:30 in the morning, be careful. Usually I'm not trading around the 7:30 number. And what that means is, even 10 or 15 minutes before, I'm not looking to take any trades, because oftentimes I'll have to hold it through the number. But this is the one where the market came down, and you got the ratio right at the low, which you like to see, and the market started going up. It's working its way up, You hit this high, nothing up here really telling you, the move is over. And then you come off of it, and you rally back up. You make a move towards the high. The high is here at 22. Got up to 20, and you got a single print. So, maybe you're starting to think, okay, well, maybe the move is over. And, so you're going to look at this single print as your resistance level. You come off of it, come back up to it, and, can't get to it. You get up to the point of control, and the market starts to sell off. This one is, a little bit tricky to say get short off of this. I said I'd much rather see this bar closer, maybe a little bit higher. But I said you can only trade what the market gives you. That's how I would analyze it. You're seeing a lot of selling, a lot of negative deltas in there. And you work your way down. You come on into this level. You got a single print here. Sorry, a small print. But, this is where you got to be careful. When it comes on the back of a single print as well, be careful. The delta is positive. It's a ratio. Find when you in the bar preceding it, if you have a reason sort of opposing what the signal you're getting, like here you have a bearish signal and here you have a bullish signal. Just sometimes it's, sometimes they cancel each other out, and other times, they work and other times they don't work. But in general, it's kind of a wash, actually, I find it. So like here, if you're looking to get long off of this, you run right into this single print. Like I said, usually I'm looking at single prints as resistance. So I know there's, immediately if I'm getting long, there's a resistance level here. Okay, then then what am I doing? Am I getting short off this level, or am I getting long off of this level? And what happens is the market goes sideways. Okay, then we trade back up just through the level, come off, hit a new level, a new single print, but it's got a strong negative delta, minus 224. So I don't know yet if I'm interested in it, because it's got a negative delta hanging over it. So if these sellers are still in there, they may reappear. And, we do pop up, come back down, sort of go back up, go, sideways. I'm really looking for a reason to want to get long in there, but, it's kind of a stretch, and if I'm holding this, getting long in here, this is 907, holding it for quite a while, and it's just sort of not really going in my way. I don't like that. And then you start to see it start to pull away here. What's interesting is we came down into this low, even though, this is a level of absorption, you're seeing small deltas, 28, 57, even in here, 50, here you are, 59, 60. The market's absorbing prices, but what's happening is you're starting to move away on strong delta, 374, 448, and you're seeing single prints, so it's telling you the market's starting to pull away. There's price rejection here, and there's buying coming in. And you work your way up here. There's nothing in here. There's no ratio. But what do you have in the next bar? You have a stopping volume. You have a ratio bounds low. Market trades up here and it starts to come off again. So you work your way back down to another ratio. It's a little bit removed from here, so I don't know if I'm interested yet. It's got still a negative delta, but then you see the single print here. Okay, so now you're getting interested. You're seeing positive deltas. You have a single print. You come down to the same level, and it stops there. You got a ratio bounds low. So you should be possibly thinking of getting long. Okay, it does violate the level by a few ticks. So if you're getting long in here, if you're using 3 or 4 ticks, you may be getting stopped out. But if you're not, the market does rally up a bit. You probably get 4 or 5 ticks out of it before you run into this single print here. And then again, you're sort of looking at the same thing that you saw here with the single print and the ratio, single print and a ratio. What happens? Market just trades down to this next single print. Just sort of going, and you can sort of see it's starting to want to go sideways. And you've seen up and down. It's one of those where you're just looking at it. Optically, it just doesn't look like it wants to go anywhere. Again, you're getting some, you get ratios that you like, but they're sort of spread out, which it's telling you the market is kind of indecisive. Okay, now you're starting to go higher here. Now this is interesting. You're starting to go higher, but you're getting ratios as you're going higher. Okay, so, what's that telling you is there's rejection, but then buyers come in and sort of take it back out. So, it's sending you mixed signals, because normally, you'd be looking to get short off of this and the market rallies up against you. Here I'd be looking to get short off of this, somewhere in here, but then it's just going to stop me out right here. This is, sometimes that's how it is on a market that's moving up, moving in one direction. And, this 42.2 is up here. So, the market has rallied. So, if you're looking to get short off these levels, here it would have failed. Here it would have failed. Here you're looking again. this is the third time. You're going to give it a third time or not. It depends on your guts. And what happens? And then now you get the move that you were looking for earlier. So, hopefully you could have caught something in there to take out all your losses from earlier. And then the market just sort of sells off and goes lower for the most part. Then after 2 o'clock, which is the old pit close, the market goes sideways. So that's the end of day 1. Day 2, which is February 10th. Okay, 7:20, market's at its low. And there's no ratio, but slightly thereafter, you're starting to see some ratios in here. You're seeing a large print, you're seeing a single print. So you're starting to think, okay, maybe the market start to pull away. But it's 7:30, and 7:30, and there's a number coming out. So you can't really trade around that. You want to wait. So you wait. Usually I like to give 5 minutes, unless it's non-farm payrolls. Then I'll give it 15 minutes. Then nothing really here. 7:35, 7:36, 7, nothing. Then here at 7:47, you're seeing this buying and selling imbalance at the low, which is, something that I talk about that I like to see. I like to scalp it for a few ticks. A few points in the S&Ps, and, in the bonds, the same thing. And, so I'm looking to be getting along, somewhere around here, 26 level, trying to get it up to 30 if I could. In this case, it didn't give me that chance, and I ran into a single print. So it's telling me to get out already. I'm not looking to hold it, and try and trade around it the rest of the afternoon. If I see a signal right after it tells me to get out, get out. Then I got a couple of single prints right in a row, which is, not necessarily bearish for the market, it's more bullish. So, I'll be looking to get short, and, I'd like to get short around this point of control, which is, the 26 level. The market's just going sideways. So, if I get short at 26, it goes against me a couple of ticks, it goes in my favor a couple of ticks. When it's like that, I have a tendency to want to get out. Okay, then we just sort of start grinding our way up. Nothing in the order flow there to really tell me get long. And, we're coming in here, 8:30 now. We're seeing a couple more single prints. Here you have a ratio as well. I'd like to see 3 in a row, but it's only 2. If you're convinced, off these 2 points of controls being side by side, that, even here you got 2 points of control side by side. Here you're seeing support, look for try and buy it on a pull back to the support. You can get the nice, 5, 6 ticks there. Okay, now the market is, it rallied here, came up to this 16 level, and starts to come off here. You got a single print there. You see it continue. This is the 3 in a row that I'm talking about. 3 in a row. The green candlestick looking to get get short. Somewhere between these points of controls. Here they're right on top of each other. So, be looking to get short. Around this 07 level. And it does, give me a chance. Where's my stop? Worst case scenario, the stop's going to be up here at this single print, which is, gives me quite a bit of room, actually. And, we get short at 07. I think it goes up to 11, 12, and it sells off nicely down to 00. Actually, even lower than that. It goes all the way down to 165.20. I'm not expecting to catch that whole entire move. I'm happy getting out at 00. Then it starts moving back up. I don't necessarily see anything right now in that order flow to tell me. Okay, we work our way back up. Okay, then we get a single print, or a 0 print rather. It's 18 on top of 0. And I'm really interested in getting short here. So, I'm looking to get short somewhere at this point of control. But then what happens? I'm staring at a single print right against me. Okay. But my stop is just going to be up here above, above this single print. So, short at 03, my stop at, what is that, 09. And unfortunately it looks like it's going to stop me out. Which it does. It just works its way back up. Still nothing really to tell me to get long. I'm starting to look here. I see a ratio. I see another ratio, but I want to see how it's going to be in the next bar. I said I'd like to have 3. Then it comes up here. You get a negative delta, a red candle, nothing. Starts to go sideways. You get the buying imbalance here in the second bar, which I do like. I'm looking for a short-term trade in the opposite direction of the buying imbalance. So in this case, it's a sell, and it goes lower. It gives you that chance to get a small profit. Okay, then we come up here, we get a divergence. You got a ratio I like. I'm looking to get short. Get short, ideally, on a pullback, but you can't always get it. So, where's my entry going to be? Somewhere around here. Where's my stop going to be? Just above this high. In this case, the market came out, took out the high by 2 ticks, which kind of sucks, but, that's, unfortunately, that's how it goes sometimes. If you want to use a tight stop, you just put it 1 tick behind it. 2 to 3 it gives you a bit more room, but, the more you widen it out, the more chance you have of, having a bigger loss. I found, it's better just to keep it as tight as possible. And then, we get another divergence, but there's no ratio. And we just go sideways after that. And then you get this ratio here. It's just, it's trying to come back to the highs, and we can't get there. Then you see a ratio here. It's telling you buying is drying up here now. If you get short somewhere, ideally up here, 24, but it doesn't pull back. Where are you going to take the trade or not? You got to think if you want to wait till it come back to your point of control. You got to understand sometimes it doesn't, and the market makes a nice move lower. Nothing in here really telling me to get long. This is where it's telling you to get short. It has a nice move lower, but nothing telling you to get long there. And we work our way up all the way up to new highs. Right, and you get another divergence and another ratio. Again, now it's coming on 1 o'clock, okay, which you got to realize 2 o'clock is going to be the close. And do you want to take a trade or not? Usually by 1 o'clock, it's iffy. But still, you're a trader. You want to take trades. That's how you get paid. Ideally, you would like to get short around this point of control. Around this point of control, look for that pullback. And you get it. It comes back up here to get short, but it doesn't move much lower. It only comes 5 or 6 ticks lower, and it's stopping at this level, and it goes back up and takes out the high by 2 ticks. So it's the analysis is right, but the trade fails. So you get stopped out. If you're using a tick. But then again, you're getting sort of that same thing that you said earlier, where you hit the high. And then you come back up to it and you get a ratio. It's telling you, hey, you get short, try and get something out of it, try and save the day. It does move a bit lower and it sort of stops here. Side by side point of controls, which, is now going to be your support in the market, and the market starts to turn higher. And then what happens? The market just steps all the way higher, all the way up into the close for the day. And you do have a selling imbalance on the divergence right up here at the end of the day, but, really by 3 o'clock, there's no reason to be trading bonds. 3 p.m. Chicago time. Okay, now this is day 3 of the bonds. This is February 11th, 2016. Again, 7 o'clock. What's happening? You're getting a couple divergences, but no ratios. It said don't just sell because you have a divergence. Look for a ratio. In this case, the market just sold off going into 7:30. Not much to get excited about there. I said I don't like to just sell because there's a divergence telling me to sell. I want to have some additional thing. This day is just going down. But this is just normal. I hate to say normal trade as the market is selling off quite dramatically, but it is normal trade. I want to have reasons to start trading. And okay, so what's this low here? The low is 169.09. Okay, so we come down, sort of make this new lows down here, and what's happening? You hit the low, you got a negative delta. Okay, starting to work our way back up, going sideways. Here's our first sign that the markets might be turning. You got a single print, you got a positive delta. Second bar, you got a positive delta. Maybe the market's starting to think of moving away. Then you get a negative delta, and then again a positive delta, small this time. So it's hard to get excited. So if you're going to start to pull away from the low, you want to see strong positive deltas. But, you get these positive deltas, then you get a negative delta immediately after it, just as strong. So it's telling you that, maybe it's not quite yet ready to move away. Then you get a couple single prints here on the bullish side, but, negative delta this time. So it's be careful. Then you get a couple of single print and a ratio bounds low. Again, be careful. It's only 2. I like to see 3, then the green bar to get short. And it doesn't happen there. You got this other bar with the average ratio. I'm not necessarily looking as this to get long right away. It's a single print with positive delta just because it's on the back of all these bars with much stronger negative delta. And, the market pops up a little bit. This was that low from before, and you got, single print here, but still nothing in there, and the selling barrage continues. You just come down into this low here, and there's nothing. As far as ratios telling you the market's turning, you're starting to see the delta pick up, which is nice, but, are you going to be convinced that that's enough to move the market? Move it higher after a lot of selling. Because if selling comes in, you've seen how strong it was. Then you just sort of go sideways here. It's hard to read too much, wanting to get short or wanting to get long in there as the market moves sideways. Again, more sideways action. Okay, now we're starting to move higher. And, you're seeing single print ratio bounds low. You do have this single print here, which is, okay, because the bar's still got a positive delta. But you're seeing the delta starting to build up, and you're looking for really some signs. The 700 is a good sign that the market is starting to move. I like to have more reason. I said, this is a day where the market's very volatile, and unfortunately the order flow isn't giving me much reason to want to take any trades. And, again, just normally this would be bearish, but the delta is kind of small. It's a ratio, but it's in it's surrounded by very strong positive delta numbers. Okay, you're working your way up to the high. You get up here, single print, but no ratio. Then you come down to the single print, but then it's met with a single print again. Okay, then, just more sideways action to the lower. Again, it's hard. So, on days when the market's moving with a lot of volatility, sometimes the order flow isn't really, I'll say clear, but, there's a lot of other factors going on into the market that makes the market a little bit harder to read. Then again, it's just, a lot of sideways action. We see bars sort of green, red, or green, red, green, red. But still not a lot of ratios on the edges. Okay, now things are starting to pick up. It's 12 o'clock. I think someone from the Fed was talking on this day, and the market is just, very thin volume. Again, on thin volume, it's hard to get a good read. This one, here you have a selling imbalance at the bottom, and it's a ratio. It's a positive delta, so, I'm kind of inclined to want to take it, although I know the market is moving fast because someone was talking. So, if I'm looking to get long, I try to get long on a pullback around, this 168.11 level. Unfortunately, it's moving around too fast. It stops me out. I'd just be having my stop a couple ticks below it. Then it's just bouncing around sideways again some more. Okay, now it's starting to put in a trend, but there's nothing in this trend, telling me to get long, or, for that matter, telling me to get short. Okay, then we work our way all the way up to this high. Again, you have this selling and buying imbalance on a red candle, which tells me to get short. And the next bar, and this delta's got a delta of 1, so it's telling me, this bar is very evenly matched. The delta is practically, buyers and sellers are evenly matched. You do have these ratios, these single prints right before it, so maybe I'm a little bit hesitant, but, what's encouraging is that the deltas are also small, so it's not big positive deltas, so it's telling me this move may be over as far as buyers, really moving the market. So, I'm looking to get short. And, so I'm looking to get short in this bar. I said, ideally, I'd like to get short a little bit higher, around 12, but this one I tend to be aggressive on, this sort of signal. So, getting short around 08 would be a fair price. And the market moves lower. It's nice that you have a single print there, which would, maybe tell you to try and squeeze a little bit more out of it. It comes down to the single print. So we're going into the